Good evening, students. Welcome back to this discussion on audit. So we have been discussing about audit reports, and today we plan to continue on that. So far, we have discussed about the format of the audit report, and in respect of that format, we have covered various types of opinions. So we have talked about unmodified opinion, then the modified opinion. Now, in respect of modified opinion, again, we spoke about qualification. We spoke about adverse opinion and the disclaimer of opinion. I believe this to be the most important part of this particular chapter, particularly modifications. Why? Because one, if you look at things practically, okay, so this is one of the challenging areas in respect of the audit report. Plus, a lot of judgment is required in this. A lot of judgment as around the final assessment of the audit. Yeah, so that's why this is quite critical. Okay, so whenever it comes to your examination also, so I would always consider it to be one of the most important areas. Yeah. Okay, so now before we move further on to our discussion for today, let's do a quick recap of some of the modifications and when is that modification required to be given. Okay, so now tell me one thing, that whenever you will come across any situation, okay, wherein you find some misstatements, and if those misstatements happen to be material or immaterial, what are the stages or what is it that you will consider to move into a modification first of all? So what do you think will be the criteria for a modification to be included in the audit report? Over to you quickly. Okay, Sania says communication with the management. Great. Pranav says whenever the misstatements are material and pervasive. I won't say necessarily pervasive, but yes, the moment you say misstatements are material, that is when you will get into modification. Yes or no? Whether that is pervasive or not will not matter because modification will anyways arise. Correct? Okay. Now can you tell me under what situation you will get into a qualified opinion? Over to you quickly. Under what situation you will move into a qualified opinion? Okay, so Ritika says when the information is not given or if the misstatements are material. Yes, so when the information is not given, in which case the possible impact is material. Yeah, and I think same is the response from Pallavi Manvi, right? Okay, so can you tell me under what situation you will get into an adverse opinion? Under what situation you will get into an adverse opinion? Aisha says when the material misstatements are there and they are also pervasive. Very good. Same is the response from Bhaskar, Pranav. Great. I think Preeti, Ritika, they have the same answer. Okay, now tell me one thing, under what situations you will get into disclaimer of opinion? Under what situation you will get into disclaimer of opinion? Over to you quickly. When the information is not available. Pranav says when sufficient appropriate evidence is not obtained and impact is material as well as pervasive. And please remember, the impact that we are talking about in this case will be the possible impact. Yes or no? That will be the possible impact, right? I think Hardik has the same answer. Great. Okay, now tell me one more thing. Now a question for you. If in case sufficient appropriate evidence is not available, sufficient appropriate evidence is not available, so can you go to adverse opinion due to this? Ever? So will there be ever a possibility that you will get into adverse opinion because the sufficient appropriate evidence is not available? So Kasak says no. Tambeshwari says no. I think same is the response from Dipali Sukhvir. Yeah. So in that case, only two possibilities will arise. Yeah. So in that case, only two possibilities will arise. What is that? Either it will be a qualification, yes or no? Either it will be a qualification or it will be disclaimer of opinion. Yeah. So inability to obtain sufficient appropriate audit evidence cannot lead to adverse opinion. Yes or no? Yes or no? Yeah. Now, at times, this is something which you may require to evaluate, depending on the information which is there in the question. Okay, so that's why very, very important for you to consider. All right. Now another point is that as regards the misstatements, tell me one thing. If let's suppose there is a material misstatement, let's suppose misstatement is material, but that was not intentional. Okay, maybe it was unintentional on the part of the management. So will you still go and qualify that as an auditor? So if the misstatement was unintentional, so will you still go qualify that? Bhavna says no. Manvi says no. Why? Neeru says no. Why? Because Hardik says in such a case, when you will communicate with the management, when you will communicate with the concerned client personnel, if that is not intentional, so what will happen? The first course of action will be to get that adjusted. Yes or no? So every time there is a misstatement, so what is going to be the first step which the auditor will take? Auditor will go talk to the client. Okay, so it's not that he'll just simply report that, or he'll just simply note that, or he'll just issue his audit report that yes, okay, I have found an error that is material, so let's issue the audit report. No, that's not how it works. Okay, so proper discussion will take place. Okay, discussion means a two-way communication between the client, between the management, between those charged with governance. And after that, this report is formally issued by the auditor. Yeah. Now, another point which we must also understand is that at times it may happen that during the course of audit, a lot of information is not made available to the audit. Okay, or maybe the required support is not provided to the auditor, required support in terms of performing the audit. Okay, so in such a case, auditor can at times also evaluate whether the auditor would like to continue with that engagement or not. Means whether the auditor would like to continue and complete that audit in whatever manner that is possible, or should he withdraw from that engagement. Okay, so of course he will discuss, he will talk to those charged with governance, all of those things will do. But even then, he may not reach the required satisfaction level which he wants. Yeah, so in such a case, he may consider withdrawing from the engagement also. Why? Because if he's not getting the required information, so why to get into that work? Yes or no? At times that may happen. So there again, if the withdrawal is possible legally, only then he will be able to withdraw. But if there are any such restrictions that no, auditor needs to complete this audit, only then he can move out. Then he'll have to complete in whatever way it is possible. And of course, issue disclaimer or qualification, whatever is his assessment. Yeah. So all of these aspects, all of these considerations are important on the part of the auditor whenever any audit will be going on. Yeah. And this is again irrespective of the size of the entity. Yes or no? Because depending on the size of the entity, auditor's materiality will also change. Okay. So you cannot say that for small entities only qualification will be there. For large entities, adverse opinion could be there. No, there's no such principle. Huh? So all of these modifications, all of these opinions that we are talking about, they will apply to each and every entity the way the principle requires. Okay, but there's no applicability as such. Correct? Yeah. So that's why some of those points you should not consider. Okay, or you that should not confuse you. Right? Okay. Now what we will do is We will look at one case scenario. Okay, and with the help of that case scenario, we'll just try to discuss this further. And in a way, we'll just try to understand. I understand that you are very clear on this, and you should be like able to answer everything, but still. Okay, so let's pick up one example. I think from your from your study material only. So there's one case scenario. Just give me a minute. I'll open that document. Okay, so if you give to this, you can also open this document, huh? So it's 8.83. Okay. Yeah, this case study. Yeah. Messrs. AB and Company is a firm of chartered accountants based in Mumbai. Mr. A and Mr. B are the partners of this firm. So firm means this firm of chartered accountants. So there are two partners, A and B. Further, we understand that the firm is engaged in various assignments, including audits. The partners are taking a summary of their work in order to prepare themselves to finalize the audit and issue the audit report to various clients. Okay, so it appears that they have completed few engagements. So we are not talking about only one engagement right now. They have completed few engagements, few audits, and they are in the process of wrapping up or maybe finalizing all those things so that they can just issue the audit report. You are requested to go through the following and answer the questions that follow. Okay, so some fact pattern is now made available to you, and you are required to answer the questions based on them. Okay, and my request to everyone is please don't look at the solution which is given. Yeah, so please don't look at the solution. Yeah, try to answer this on your own. Okay. During the audit of Messrs. Persistent and Company, so there's a company Persistent. Mr. A found that firm has changed the method of depreciation. So it's a firm, okay, but we are not talking about firm of chartered accountants. We are talking about a firm, Persistent and Company. So it changed its method of depreciation from WDV to SLM, but has not given the retrospective effect. Okay. A has calculated difference of depreciation, but okay, so if you talk about this CA, so CA has calculated the difference of depreciation, but Persistent and Company has stated that they don't want to change the financial statements. And if the auditor persists, they may give the effect in the next financial year. Okay. So it appears there is an error and the auditor is insisting to adjust that. Client doesn't want to change that in the current year. But at the same time, client is also quite flexible. Now, what is the flexibility? So client is saying, okay, no worries. You want this adjustment to be passed? No worries. Please leave this current year. Yeah, so let's suppose the audit is going on for 23-24. So auditor is saying, so the client is saying, okay, let this 23-24 get signed. In the next year, 24-25, we will adjust this. Okay, so the client is showing some flexibility. Good. Okay. Further, during the audit of Messrs. Dubious Brothers, so this is another client. B observed that the firm had a very large amount of cash sales. Okay, so now we are talking about Dubious Brothers. The sales was quite significant, and there were no details of the customers to whom those sales were made. So cash sales means cash was generated, and the details of customers to whom those sales have been made are not available. All right. Further, cash generated was not even deposited into the bank regularly. So whenever there's a cash sale, what would the company do or the entity do? They will collect the cash during the day and they will deposit that cash next day in the bank. So that's how things practically work. Or in some of the cases, they may collect the cash for 2 to 3 days if the cash is not significant and then deposit it. Or maybe every week they will collect and every week they will deposit. Okay, so that's how it should be done. Because why to keep so much cash otherwise? Yeah, okay. B asked the firm to give him an opportunity to count cash. The manager of the firm said that cash is with the owner and it cannot be made available to the auditor for checking purposes. Okay. The manager also declined to give an opportunity for stock verification. So, can you tell me what is the meaning of stock verification here? I think we talked about it quickly. What is the meaning of stock verification here? Quickly, huh? Very good. So, Pallavi says physical verification of inventory. Yes. So we talked about it and we also understood as to what does it mean? Where is this required? Correct? Yeah. Anyways, you would have covered that. Okay. Now, then there is also another client, Honest and Associates. Okay. So the name of this client is quite interesting. A came to know that the firm has changed its method of valuation of stock. Okay. So this is again audited by Mr. A, wherein again the method of valuation seems to have changed. The change has a material impact on the financial statements of the firm. The firm has made required disclosures in the financial statements and has given proper accounting treatment to this exercise. Okay. So there are three scenarios, right? Right? Hopefully you have understood all of these scenarios. Everyone? Yeah? Clear on this? All these case scenarios, right? Okay, now, based on the above, you are required to answer these questions. So we'll pick up all of these questions one by one. Now, in the first question, when we are talking about Messrs. Persistent and Company, what would be an ideal audit opinion? Okay, so this option C you can ignore for the time being. Option C, because we have not discussed, so some of you don't know, you can ignore it. Okay. What do you think should be the final position which the auditor should take in this case? Unmodified opinion, qualified opinion, or a disclaimer? Over to you quickly. So Bhavna, Hardik, they are going with B. Nitin, qualified. Sania, Aisha, they are saying qualified. Modified. See, when you say modified, I'm assuming that to be qualified, huh? Because option B and D, both of them are modification. Yes or no? Yeah. Both of them are modification. So whenever you use this term modification, please be very careful. Huh? Modification is more of a general term, but qualification is specific. Disclaimer is specific. Adverse is specific. Correct? Okay, great. So I can see this response 1B from everyone. Huh? Very good. So now in this case, it's very clear that there's some error which the auditor has observed. There's some error which the auditor has observed, and that error needs to be rectified. Yes or no? That error needs to be rectified. Yeah. Now in this case, because there's an error, so that's why option A is not possible. C, anyways, we have discarded. D is not possible. Why? Because information doesn't seem to be a problem. Yeah. Information doesn't seem to be a problem here. Right? So that's why the only option left anyways is what? B. Yeah. Okay, great. I think Aditya is also going with B. Kiran said A. Okay, so now Kasak has a very good point, but Kasak, I think you'll have to go by the requirements. Huh? So I can understand the accounting requirement, which could be a question mark, but let's assume it's an accounting error. Huh? Okay, let's assume that because we'll have to go with that, right? All right, so now question two. In case of Messrs. Dubious Brothers, what audit opinion should the auditor give? Over to you. In this case, what should be the opinion by the auditor in case of Dubious Brothers? So Dilip, I think Prithviraj, Bhaskar, they are all going with C. Very good. Asha, Tameshwari, Pranav, Pallavi, they are saying C. Nancy is going with C. Nitin, Apurv, Dipali, they are going with C. Gurminder, Bhavna, again, sorry, Bhavna is saying A. Okay, Gurminder C, Manvi C. So, okay, so now, see, in this case, I would say, and to a certain extent, I would agree. Okay, when some of you are saying A, I'm not saying the answer is A, but I'm saying I can understand the confusion. Huh? I can understand the confusion which is involved. So when some of you will say A, so very clearly the only two options which are relevant are what? A and C. B is not possible, D is not possible. Clearly? Now, let's try to understand the impact. See, if you look at the requirements of the question simply requires you to choose one of the options. Okay, you can't write a descriptive answer. Okay, like in the previous session we discussed, so whenever you are not clear, you can say if material, then qualified. If material and pervasive, you will go to adverse or disclaimer. Now, in the given situation, you don't know whether it is material or material and pervasive. Correct? So that's why you'll have to make the best assessment. Yes or no? That's the best assessment which is possible. You'll have to get into that. Now, how do we get into that? Let's try to understand that. See, in this case, if you look at the financial statements of the company or this firm, three things are a problem. Okay, there are three areas which are a problem. One area is what? Sales. Okay, sales of the entity is a big concern over which auditor is not getting the sufficient information. Yeah, it may happen that the sales are not correct. The details of the customers are not available. Yeah, and if you look at the P&L, in the P&L, what is the most important component for any type of entity in the P&L? What would you consider to be the most important area? Of course, sales. Yeah. So if the sales is not correct, or if you have doubt over the sales, then definitely your P&L will get challenged. Yes or no? Your P&L will become misstated to a great extent. Okay. So now at one place, what do you find? That because of this cash sales, which is quite significant, P&L is misstated. Okay. That is one. Now, if you go to the balance sheet, in the balance sheet, cash and bank is considered to be an extremely important area. I'm not saying whether that is significant or insignificant. I'm saying that is considered to be a very important area for audit purposes. And currently, the cash balance which the company is having, auditor doesn't know. Auditor doesn't know about it. See, at one place, to say that cash sales are quite significant. So the question says, they are quite significant. Very large amount of cash sales have been made. and at the other place to say that this cash is available with the owner. Okay, so this puts a question mark. Okay, yes or no? Whether the cash is appropriately recorded or not. So that's why in the balance sheet, again, a very, very important area seems to be the one over which no clarity is available. So what will you say? Possible impact is material, right? Then if you look at the inventory, now for the inventory, what is the most important audit procedure in case of any audit? In case of any audit, what is the most important assertion which you will go and test for inventory? Existence. Very good. Yeah. So who mentioned this? Pranav. Very good. So existence of inventory, that's the most important assertion you need to check. And how do you check that? Through physical verification. Okay. Now that opportunity has not been provided to the auditor. So that's why what will happen? This entire inventory gets challenged. Okay. Now let's try to understand the resultant impact. So if let's suppose the auditor will not have the comfort on the inventory, then there is another item in the P&L, cost of goods sold. Cost of goods sold. So that will also go for a toss. Yes or no? So if the inventory gets challenged, so the cost of goods sold will also become a problem. Yes or no? Yes or no? In the P&L, that cost of goods sold, how do you get it? Change in stock. Change in stock. And if the stock is something over which you don't have the comfort, so that cost of goods sold will get impacted. Means you'll not have the comfort over there. Yeah. So one can understand that in this P&L, there are a lot of areas. In this P&L, there are a lot of areas over which the auditor is not getting the comfort. Correct? Okay. So therefore, to make a statement that this impact is going to be pervasive will not be inappropriate. Yeah. And that's why we can definitely consider disclaimer as the best assessment. Right? Right? Clear on this, everyone? Any questions, any doubts? Clear, everyone? Okay, Bhavna is clear. Yeah, everyone clear? Very good. Okay, so now moving on to this third case scenario. According to you, what would be the appropriate course of action in respect of Messrs. Honest and Associates? Over to you. For Honest and Associates, what should be the assessment on the part of the auditor? Tell me. Okay, so I think the solution talks about EUM, emphasis of matter, right? Solution talks about emphasis of matter, correct? Yeah, because we have not covered this, so that's why we can just skip this for the time being. Yeah, we can skip this for the time being. Okay, so what I'll do is I'll just take you to next part. Question number 4. When the auditor, after the conclusion of an audit exercise, is of the opinion that there are material misstatements in the financial statements, but those are not pervasive, then what will be the outcome? Tell me, what will the auditor do? I think this is very, very easy for everyone to answer. Very good. Yeah, so I can see everyone answering as B. Ritika, Niru, Apur. Very good. Sania, Nitin, great. Yeah, I think this is very, very easy. Correct? Great. And this is very easy because you understand this conceptually, right? Okay, great. Next question. When the auditor concludes, that the financial statements are prepared in all material respects in accordance with the applicable financial reporting framework, then what will be the opinion of the auditor? Over to you quickly. I would say again, this is very, very easy. Yes or no? Because this is more of concept which is being asked rather than based on the case scenario. Yes or no? So Tambeshwari says A, but I think everyone is saying D. Can you tell me, Tambeshwari, why are you answering this as A? Over to you quickly. Okay. Kiran is saying D. Nitin is going with D. So Tambeshwari, any specific reason? Why would you want to go with A? Reason for this one, please quickly. Quickly. Or anyone else who believes that unmodified opinion should not be given? Tell me quickly. Anyone? No? So everyone clear on this? Yeah? Clear? Everyone clear? All right. Okay. So what I'll do is we'll pick up some more examples, because there's something quite important. And as I told you, some of these things that we have covered so far, I believe that to be quite important. So let's look at some more examples around this. Just give me a minute. Okay, so there's a case scenario we can pick up, and we can then discuss as to what should be the solution for this, right? Okay, so now this one. Okay, so this company Shiv Limited, which is a manufacturer of gray cement, something like this. It is one of the leading companies and has a great capacity. Okay, so company has got various plants. Some information is available. Company is also operating across countries. Yeah, in India, it is one of the largest exporter. Okay, great. And this is also a listed company, has an audit committee comprising 5 directors. Auditors of the company, now comes the important point. Auditors of the company were newly appointed for the financial year 31st March 19. Okay. Means for the first time, auditor will audit this company. We are talking about the current affairs. And after completion of their audit, auditors were having a discussion with the audit committee regarding the financial statements of the company and their audit report. Okay. One of the audit committee members, after reviewing the auditor's report, asked the auditors to explain their roles and responsibilities, and was also of the view that drafting of the audit report was not proper because auditor had written following lines. Okay, so auditor wrote that we believe audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Then our objectives are to obtain reasonable assurance about whether financial statements are free from materials. Okay, so these uh, standard language which should have been there, that is what has been written. But audit committee is not liking this for some reason. We don't know. Okay. Audit committee member found above 2 lines contradictory. Now let's understand the problem. Okay. So now what is the problem? Audit committee member said, he said that auditor at one place is saying that he has obtained sufficient appropriate audit evidence, and in his responsibilities, auditor has reduced the audit objective to only obtaining reasonable assurance. Okay, now this is very, very important for you to look at. For this, the auditor explained to the audit committee that it is the standard wording used for drafting the audit report, and this is also in line with the requirements of the auditing standards. Okay, so now there's a concern from those charged with governance. Audit committee means those charged with governance. Okay, so now they have raised a very, very valid point. Now this is for you to look at because you need to comment on this. Okay, so they have a very valid argument. So what is their argument? They are saying at one place, auditor is quite comfortable. Why? Because auditor is making this statement. We have obtained sufficient and appropriate audit evidence. Okay, so at one place, auditor is saying that, okay, audit committee is saying that at one place you are making this comment that whatever you wanted, you have obtained. Okay, yeah. Then why are you writing that you have obtained only reasonable assurance? Okay, so that's the concern. Okay, why? Because then you should be giving absolute assurance because everything that you wanted, everything that you required, you have obtained that. Okay, so why can't you get on to absolute assurance? Why are you limited to only the reasonable assurance? Because in the reasonable assurance, you are limiting your opinion. Yeah. So what do you think about it? Your comments on this. Over to you. Okay, Pranav says reasonable assurance is a high level of assurance and there are inherent limitations of the auditor. All right. What about others? Hardik says he is not an expert auditor. Okay, and this is not an investigation. So you mean to say that whatever auditor has given is appropriate? Is that the response from your side? Anyone else? Quickly. Okay, so Ritika has, I think, given some technical answer. Huh? Okay, so she's saying that they seem to be incompetent audit committee. They are not having idea of objectives of the audit. All right. Okay, so Prithviraj says auditor cannot check. Okay, so I think one point over which you seem to have complete clarity is about the drafting of the audit report. Okay, so whatever auditor has given is appropriate. Yes or no? So when the auditor is talking about basis, is that basis correct? The answer is yes. This basis is absolutely correct. Why? Because whatever he was required to obtain, he has done that. And because of which he has been able to make this comment about reasonable assurance. Because if this was not made available to him, then the auditor would not have given as reasonable assurance. In fact, he would have gone on to say that there are problems, there are misstatements or possible misstatements. Yes or no? Yeah? All right, great. Good. All right. So now moving further. Okay, so what we will do is we'll now move further. Huh? Okay, so far, some of these modifications that we have looked at, now we'll also try to cover some other aspects of the audit report. Okay, which are considered to be kind of modification in nature, but they are not actually a modification or a kind of modification. So let's talk about that. Okay, so we are now going to talk about a couple of areas or a couple of items, emphasis of matter and other matter. Now, what do you mean by this? Okay, and how are these required to be captured in the audit report? And a very, very important aspect or the understanding that we need to obtain about these two is that we are not talking about modifications anymore. Okay, yeah. So, in a way, we are going back to unmodified opinion. At times, what may happen is that auditor has completed the audit. All right, and everything is fine, means there's no material misstatement in the financial statements. But there could be a matter over which there is some uncertainty. Uncertainty in the sense means whose outcome is not very clear and over which there is no clarity absolutely. And it's not about the auditor, but it's also about the management, also about the company. Means every effort has been done by the auditor as well as the company in respect of that particular matter to understand that what is going to be the likely outcome, likely impact of that matter on the financial statements of the company. Okay. So if that is uncertain, what is the problem? Now, in that case, the problem is that because that matter is uncertain, okay, so there are two likely impact which are possible. One can be positive and second can be negative. Yes or no? So every time there will be a matter, what will be the impact? Either that will be a positive impact or negative impact. Now the problem is that in respect of such matter, if the impact happens to be negative, then this could have very serious consequences, or this could have a very significant impact on the financial statements of the company. Yeah. And that is something over which auditor has performed all the procedures. Now, please understand, auditor has performed all the procedures. And the auditor is unable to conclude that whether it will have a positive impact or negative impact, because that is not known at this point of time on the basis of the facts, on the basis of the development on that matter which has been going on. As of now, we cannot say as to what is going to be the impact, what is going to be the outcome in respect of that matter. And let's try to understand this with the help of an example. I think that is when you will get more clarity. Okay. Now, let's suppose during the year, company has received a demand from tax department. Okay. So there's a demand from tax department. Possible? Yes or no? Now, as regards the matter due to which a demand has been raised, a company may sometimes agree and sometimes disagree. So if the company will agree, what will they do? They will pay this, record that as an expense in the financial statements. Yes or no? Tell me. So if they will agree, what will they do? They will record it, pay this, and this will be taken to the financial statements. Yes or no? Yeah. Tambeshri says yes. And if they don't agree, if they disagree, what is it that they will do? If the company disagrees, so company will go fight with the department. Means company will get into a litigation. Yes or no? Yeah. So company will say, no, I don't agree with this demand. So company will get into a litigation. Okay. Now let's suppose the amount of this demand is quite significant. So significant, then this can have a severe impact on the financial statements of a company. You can say this can have a impact which could be pervasive in nature. Okay. So I'm just talking about the extent to which the impact could be there. Now, as of now, as you, or if you look into the matter, so what is it that the company will do? Company will evaluate the merits of the case. So company will evaluate the technicality on the matter. And at times, company may not know whether the company will win that case or lose that case. Company may also engage some tax consultants, not the one which belong to the auditor, but a third party consultant. Okay. And they may also not be very, very clear. Huh? So they may say, okay, we'll get into the litigation, but we don't know as to what is going to be the outcome. It could be favorable or unfavorable. Okay. And the same assessment is also required to be done by the auditor, because if the company will do this, company auditor will also need to do this assessment. Yeah. So the auditor may also not be very, very clear, or maybe the clarity is not possible at this point of time. Why? Because the development of the matter is in stage wherein its outcome cannot be ascertained appropriately at this point of time. Okay. Now, if you look at the situation right now in respect of this matter, as an auditor, what will you say? Will you ask the company to provide this? If they do this, that may be inappropriate. Why? Because if the company is going to win the case, then today, if you ask them to provide, then tomorrow they will have to reverse. Yes or no? So that will be inappropriate. Or if you don't ask them to provide, and what if they lose in future? Yeah. So it's like it's a matter on which you're stuck. It can go either way. Huh? It's a 50-50 situation. Yeah. So there's uncertainty which is attached on this matter. But in respect of this matter, auditor will not say there is some material misstatement. Yes or no? Why? Because material misstatement can be said to be there when the auditor is clear that this needs to be recorded but has not been recorded by the company. Or this need not be recorded but has been recorded by the company. Okay. As of now, that clarity is not there. Yeah. So that's why it will be inappropriate to say that there's material misstatement. Yes or no? Yes or no? Yeah. Everyone understood so far? Everyone understood? So that means, in respect of this matter, opinion cannot be modified. Correct? Yeah. So the conclusion of the auditor is not to get into a modification. Yeah. Now, in respect of this matter, opinion is going to be unmodified. But at the same time, there's another problem. What's the problem? Problem is about its possible impact which could arise in future, over which there is uncertainty, which is quite significant, which can have an impact on the financial statements of the company, and over which the stakeholders, users of the financial statement should be having the clarity. For example, if let's suppose you are the users of the financial statements. So today, what is it that I would like to do? So as an auditor, I would like to say that please understand that the financial statements that you are looking at, they are absolutely okay. But there's one matter which is going on, over which there's no clarity as of now. But in future, its possible impact, if at all that arises, can significantly impact this financial statements. Yes or no? So that is what you will want to do. Or maybe you may decide that this is something which will be appropriate to be done. Yeah. Now, this type of, or you can say this type of situation leads to adding one more para in the audit report, that is called as emphasis of matter. And what does it mean? It means that the auditor wants to highlight something to the users of the financial statements. Okay. But there's a feature which is attached to this para. So this is very, very commonly called as EOM. Emphasis of matter. EOM. So there's a feature of this para. So every time the auditor will include this para in the audit report. And please also understand, this para is not mandatory para. So every time there is an audit report, you will not find this para. Only and when it is applicable, you will include this. Unlike opinion, unlike basis for opinion, which will always be there. Yes or no? Yeah. Now, in respect of this para, we have done our assessment. Okay. And we have also discussed as to how this assessment is required to be done. Okay. So that part we have discussed so far as to how that assessment should have been done. What is the basis which the auditor will follow for assessment of EOM? Means when this EOM should be included. But there's one more feature. Let's try to understand the feature of this EOM. EOM means auditor wants to highlight something in the financial statements to the users. Now, please understand, if let's suppose this is the financial statement, okay? If let's suppose this is the financial statement. In this financial statement, if the auditor wants to highlight something, let's suppose some note is given, some figures are covered, or if there is any such thing which is there in the financial statement, which the auditor wants to highlight. Yeah. For example, if there is something very, very important, or maybe you want to highlight something, what will you do? Tell me. If you draft something, if there is something very, very important, what will you do? You will underline that, you will write that in bold, or maybe you'll use a highlighter. Yes or no? So these are the things you'll do. But when can you do that? When something is written. When can you highlight that? When something is written. So if something is not written, can you highlight that? Tell me. Can you highlight that? The answer is no. Yes or no? Yeah. So same is the case in respect of EOM. EOM means auditor wants to highlight something. And for that, it is important that something has to be there in the financial statements. Okay. So that's why what is the feature? That EOM is only possible when there is a when there is a matter, when there is a matter which the auditor wants to refer. Okay. And that matter should be presented, should be there in the financial statements. Okay. And which is of such importance that it is fundamental to understanding of users of the financial statements. If that is not highlighted, it can have a significant impact as far as understanding of financial statements is concerned. Okay. Now, the question may arise that, sir, what do you mean by reference of that matter? Or how do you say that is presented or disclosed? Now, for this, any of the methods could be possible. So maybe auditor wants to highlight a particular item which is recognized. Say he wants to talk about PPE. Maybe there is a disclosure which is given in the financial statements. Maybe there is a note number 10 which is given in the financial statements, which he wants to highlight. Yeah. So anything could be there in the financial statements. But the point is that if the company will not present or disclose that item in the financial statements, then on its own, auditor cannot give the EOM. Auditor can't just simply say that there is a matter which the company has not disclosed or which there is nothing has been specified in the financial statements, but I want to highlight it. No, that is not possible. Okay. In that case, EOM is not possible. Understood? Yeah. So for EOM, it is extremely important. You can say by default, what is the requirement? That there has to be a reference. EOM needs to have a reference, or you can say that reference has to be there. If the reference is missing, then EOM is not possible. Okay. In fact, we'll go and read some EOM para in the audit report. We'll also pick up some audit reports today. Okay, we'll go read that so that you can get some more clarity around the EOM. Now, in respect of that EOM, in most of the cases, what you will also find is that when this EOM para is written, then the auditor will not give a lot of explanations. Okay, so auditor will not give a detailed commentary on that matter. No. That detailed commentary, that explanation is something which the management will provide in its financial statements. The whole idea of the auditor is what? That in his audit report, he will include a separate para and will just simply ask the users that please go and check that para or go and check that note in the financial statements. Because financial statements could be running into say 70 pages, 100 pages, 50 pages, and the user may overlook some part of the financial statements. Okay. So what is the idea of the auditor? Idea of the auditor is to go and highlight that through his audit report, so that the user should not say that this was an important matter, but you didn't let me know. Okay. So auditor is just making sure that that particular item doesn't get missed from the user. Okay. Understood? Understood about the meaning of EUM as to where does this EUM is required to be covered? Yeah. And at the same time, hopefully you have understood that EUM doesn't mean that there is a modification. There's no material misstatement in relation to EUM. Everyone clear on this? Yeah. Bhavna is asking about the audit report. Yes, we'll get on to the audit report. Okay, we'll see that. Don't worry. Yeah. So let me just discuss this other item also, other matter. Then we'll look at the audit report for both these things. Okay. Yeah. Any questions? Any doubts so far? Any questions? Any doubts? No? Everyone clear? Okay, so let's move on to this next area also. Okay, Bhaskar is saying, sir, EUM is a kind of highlighter, not an opinion. Yes, absolutely correct. EUM is not an opinion. Okay, so this is only about highlighting something, because opinion is already covered in the opinion para. Yeah, over and above that para, this para will also be included. Yeah. Tameshwari, I think you will get clarity around this when we'll go look at the audit. Okay. Now, moving on to another paragraph which could be there in the audit report. Now, please remember this EUM para or this other matter para. You will not always find them in every audit report. Understood? Yeah. See, there are various contents of the audit report that we have discussed. And let me just take you to those contents. So these were the contents. So in the content of the audit report, this title will always be there for every audit report. Addressee will always be there. Subtitle will always be there. Opinion, whether it is unmodified or modified, this will always be there. Similarly, basis for opinion will always be there. Material uncertainty related to going concern we discussed will be there only when applicable. Otherwise, it will not be there. Okay. And similarly, EUM or other matter or other para. Yeah, other matter para. So they will be given only if applicable. Okay. CAM is something we'll talk about. Other information will always be there. Responsibilities always be there. Yeah. A report on legal regulatory requirements always there. Signature, date and place always there. Understood? Yeah. Okay. Now, let's talk about this other matter paragraph. So what do you mean by this? Other matter paragraph is also about highlighting something. Okay. So it is again exactly similar to what we have discussed about EUM. Means here again the objective is what? By EUM, I mean to say here again the objective is what? Auditor wants to bring to the notice of the users of financial statements about some matter, in relation to the financial statements. Yes or no? But unlike EUM, other matter paragraph is given in respect of those matters which are not presented or disclosed in the financial statements. Okay, it refers to the matter. So again, the matter will be referred, but those matters will be the one which are not presented other than those presented or disclosed in the financial statements. Okay, but at the same time, they are important for the users. Okay, and they are quite important for the users. Now, a question may arise that what could be such type of matter? So let's try to take some examples for this. Say, during the year 2023-24, audit of a company was carried out by B and company. Okay, so this was the auditor, B and company. Okay, so they did the audit of this company. Fine. Now, next year, for 24-25, a new auditor has been appointed. Now, who is the auditor? Say A and company is the auditor. Yeah. So now in 24-25, a new auditor has been appointed who is performing audit of the financial statements of 24-25. Okay. Now tell me one thing, that in respect of the financial statements, okay, do you see anywhere, I'm talking about the accounting requirements, okay, it's more of accounting requirements that I'm talking about right now, that anywhere in the financial statements, do you see any requirement to give a disclosure about the change of the auditor? Tell me. During the year or for the current year, auditor has changed. Is there any such requirement in any of the accounting standard to disclose that in the financial statements? So far, anything that you would have covered under your accounting requirements? The answer is no. Answer is no. Have you ever seen any financial statements in which a disclosure about change of auditor is given? No, that is not required. Okay. But let's try to understand it from the perspective of the auditor. Okay. And again, for this, we'll have another topic over which we are going to touch upon this matter again in the form of comparative corresponding figures. When the auditor will audit the financial statements for 24-25, okay, this auditor A and company. So will this auditor go and repeat the audit of 23-24? Tell me. Will this auditor go and repeat the audit of 23-24? Pallavi says no. Bhaskar says no. Right? But in the financial statements for 24-25, will there be a column for 23-24 or not? Will there be a column of 23-24 or not? Yes or no? Yeah. And which is again a very, very important component of the financial statements. Yes or no? Yeah. Now, an auditor is going to opine on the financial statement. So try to understand the position of A and company. A and company is going to opine on the financial statements for 24-25, wherein the comparatives are given, which are not audited by A and company. So what is it that A and company will do? That is where A and company will bring in this other matter para. Okay, so in their report, they will say that previous year financial statements were not audited by us. Okay, that was audited by some other firm. Understood? That's one of the examples around it. Okay, that is only one of the examples around it. Fine. Yeah. So now what we will do is we'll look at some audit reports, and in those audit reports, we'll try to see how these emphasis of matters are given, or what all other matter paragraphs are covered, and what are the matters which are covered over there, and what is this reference which is given for EM or in case of EM, and what is this other matter in which case reference is not possible or reference is not available. Okay. Yeah. So both these aspects will look at now. Okay, so what I'll do is just give me a minute and let me just go to the audit report. All right, so let's look at this report now. Okay, so now, can you see this report, everyone? Yeah? Can you see this report? Quickly? Yeah? So now, in this report, you will observe everything is there. Title, opinion, basis for opinion, all of these things are there. Along with that, what do you have? EUM. Okay, so which means that EUM is not an opinion, number one. And if you have given opinion, still EUM is required to be given. Yeah. So let's try to understand as to what is it that they are trying to convey. So the auditor is saying we draw attention to note 2C of the financial statements, which describes in detail economic and social consequences, disruption the company is facing as a result of COVID, which is impacting supply chains, consumer demand, financial markets, commodity prices, various other things. Okay, so can you understand that? Auditor has not explained the matter. Can you see this? Yeah. But auditor is saying that I want to draw your attention to a matter which is given in the financial statements. Now, if the user will read this report, so the user will understand that there is something which is very, very important. I need to check. So when the user will go check the financial statements, which note number he will become aware is important? Note 2C. Note 2C. Yes or no? Yeah. So we'll also go look at this note 2C. Further, there is a very important point. Now, this point. In this EOM para, auditor is also trying to clarify. Why? Because even though we have discussed, see, you are chartered accountants or future chartered accountants. So you'll understand this point. Why? Because you have read this. But user may not know. User may get confused. User may think that just now auditor gave an opinion and he said that everything is okay. So opinion was clean. And now he is saying there is a problem. There is something I want to highlight. So will the user get confused or not? So if the user is a layman, he is not an audit expert, he is not an accounting expert, will he get confused with this or not? Tell me. Tell me quickly, everyone. Yes. So will that lead to a confusion? Yeah. Ratimalini says yes. Now to avoid that, okay, to do away with any such confusion, auditor is clarifying. Auditor is saying that our opinion is not modified in respect of this matter. Yeah. So now the user will feel comfortable. Okay. Now he will feel all right. He'll say, okay. So that means it's not a problem. There's something important I need to know. But as far as opinion is concerned, financial statements are concerned, they are not misstated. They are not misstated. Clear? Everyone clear on this? Yeah? Okay, now I understand in this report, we also have other matter para. So let me just look. Okay, yeah. All right. So let's look at this other matter para. Okay, let's try to read this para. In this para, auditor is saying we did not audit the financial information of one joint operation included in the standalone financial statements of the company, whose financial information reflect total revenue of 10,000 crore, net cash flows amounting to this, so and so, as considered in the financial statements. The financial information of this joint operation has been audited by another auditor whose report has been furnished to us, and our opinion insofar as it relates to sorry I'll so far as it relates to the amounts and disclosures in respect of this joint operation is based solely on report of such other auditor. Okay, so now here again, there seems to be one branch office. You can understand that there is a branch office of this company. Okay, joint operation, you can say it's a branch. So it appears that one of the branches of this company was audited by another auditor. Okay, and what did that auditor do? Auditor audited that and provided his audit report to the main auditor. So therefore, in this case, what is this auditor trying to convey? This auditor of the company is saying that, see, I have audited the financial statements of the company, but there is one branch which I have not audited, Some other auditor has audited. Okay, and I have relied on the report of that auditor. Okay, further, he says, our opinion is not modified in respect of this matter. So he's saying you should not think that there is any problem. I'm just trying to convey this to you. Now, in respect of other matter paragraph, do you think any reference is possible by the company in the financial statements? Do you think that is possible? Do you think that is possible? The answer is no. Why? Because this is more of an audit matter. There's nothing around accounting here. Because if you look at the company, they can only include something which relates to accounting in the financial statements. Anything which relates to audit, who needs to take care of that? Auditor. Yeah. So understood the meaning of EOM as to how EOM is given, why is that given, and what is that requirement of reference, which has to be there always. And how is it different from other matter paragraph, for which reference will never be given in the financial statements. Everyone clear? Everyone clear on this? Quickly, any questions, any doubts if you have, please ask me. Yeah, Tambeshwari, I think you wanted to look at the report. Hopefully you are clear on this now. Yeah. So Neeru, Hardik, they are clear. Yeah. Hopefully you have understood this, as around the EOM. So I would say, along with the modifications in this particular chapter, these two things. Yes, Dilip, your message is now visible. Okay, so I understand some of your messages could be there. See, I keep receiving a lot of messages, so that's why at times some of the messages get skipped because a lot of messages are coming. So that could be a possibility. Yeah, but now I can see this message. Okay, so I would say that in this particular chapter, along with those modifications, okay, so the three modifications that we discussed, these two paragraphs are also very important. So I would say, why? Because they are all based on significant assessment. Significant judgment is required every time you'll evaluate that. Yeah, so that's why you need to be like very, very clear in terms of these three areas. Okay. Yeah, everyone clear? All right. So now what we will do is we'll just try to look at one example. Yeah. So what I'll do is I'll just go to that example now. Just give me a minute. Okay, so yes. Okay, so we can discuss one example. I think there's a query. Yeah. So Hardik is saying, sir, in that report, what was written in note 2C? Okay, I'll go to that note also. Yeah. Maybe after this. Okay. Apoorv is asking, sir, EOM is first communicated with the manager. See, it's not about what is first given to the management or so even if let's suppose you talk about the audit report or if you talk about some of these matters, see how will this audit go on? Let's try to understand this practically. So let's suppose you are the client. Let's suppose you are the CFO of a company. Okay. Yeah. So let's try to understand the situation. Hopefully you'll get this clarity in then. Apurv, let's suppose you are the CFO of a company and I am the auditor. Okay. So you have asked me to audit. So let's suppose my team is auditing. I am also coming over there. So audit is not something which will be completed in a day. So let's suppose I take a month. Okay. So during the course of month, there will be a lot of meetings, a lot of procedures which will be performed. So every now and then when we'll meet, we'll keep discussing. Okay. So if there's any observation I'll discuss with you. So this is a ongoing process and this discussion keeps happening. So I'll not do that for this complete 1 month. There are a lot of areas over which I'll come across problems. I'll keep note of that and I'll reserve that to discuss with you at the last. No, that's not how it works. Okay, it's a joint exercise. Now let's suppose we have been discussing it's done. And at the end, we have reached a conclusion that I want to include an EM or maybe I want to give a modification and you as CFO is fine. But you want that this needs to be highlighted to the management, to the board. So what will you do? You will also reach out to the board. You will tell the board that this is the thing which has been going on in the audit. Okay, so you'll keep them informed. Yeah. Then you'll ask me for a report. You'll say, okay, fine, we are happy to go with this EOM as well as modification. Please share the wordings you'll want to include. Then I'll tell you that these are the wordings you are planning. So a draft report will be given to you. And the same discussion will be done with the board. Okay. So once everything is in place, everything has been discussed, mutually agreed, that's when the report will be finally signed off. So that's how it practically works. Understood? Put clear on this? Yeah. Okay, great. Now let's look at this example. Lomex Limited is a company engaged in the business of manufacturing of candles. CA Kamal Nath is the statutory auditor of the company for financial year 21-22. During the year under audit, there was a fire in company's factory, as a result of which some of the company's plant and machinery was destroyed. The same was disclosed by the company in its notes to accounts annexed to the financial statements. CA Kamal Nath decided to communicate this matter in the auditor's report, as he is of the view that the matter is of such importance that it is fundamental to the user's understanding of the financial statements. But at the same time, I'll just add to this, at the same time, there's no modification that he wants to attach to this. So how will you deal with this? Over to you. So tell me, how will you deal with this? Over to you, quickly. Quickly, how will you deal with this matter? Quickly, everyone. Okay, Hardik says he can disclose the same as EOM and he should clearly say that the opinion is not modified. I think same is the response from Pranab. Yeah. What about others? Yeah. Pallavi, Tambeshwari, they are saying the same thing. Okay, let's try to also understand. So if let's suppose EOM is given, so what will happen? What will be the wordings? Because at times you may be asked to produce that. So what will be the wordings? I think Anjali, Ritika, they have the same answer. So in the audit report, you don't need to elaborate. Yeah. Can you read this language? We draw attention to note Y of the financial statements, which describes effects of fire in the company's factory. That's it. That's it. Okay. Auditor is not explaining anything beyond this. Why? Because all that explanation is covered in the note. Yeah. Auditor doesn't want to top up anything. Yeah. Idea is to simply highlight that and give the reference. But a very, very important point which we discussed, what is that? To clarify that the opinion is not modified. So you don't think that opinion is modified in respect of this matter. Yeah. I think Nancy has also given this. Very good. All right. Great. So I think this was all about EOM and other matter paragraph. And we can just take a break before we move further. But any questions, any doubts that you may have, let's discuss that and then we'll take a break. Yes, over to you. Any questions, any doubts you may have? Quickly, huh? Anyone? Any questions? No? Okay, so I think Hardik has a point. Yes, Hardik. So you are saying on page 8.30. Okay, so what is the query? Let me just go to that document, please. 8.30. So I understand this is the page, right? Tell me. So what is the question? So you are asking what is this? Yeah, so this I think is a draft format which is given to you, okay, for your reference. Yeah, so if you look at the auditing standards, in the auditing standards, some draft audit reports are covered. You can say some standard formats have been given so that the auditors can go use that language. Okay. But we have looked at the actual audit reports. Yeah. So this is only the format for your understanding. But I think you can get better understanding when you go look at the actual report. Pallavi is asking, sir, we need to remember the wordings of all paras. No, you need to just simply understand that conceptually. And I think we discussed now. For you to remember this technical language for all these paras is going to be extremely difficult. Okay, so I don't think it's going to be possible or easy for you to do that. See, if you can do that, that's great. But if you don't do that, or if that is not done, important thing is you should be able to conceptually present that if at all that is asked in the exam. Yeah, so this communication has to be there wherein you are able to put across the concept. So if your language is technically here and there, I won't consider that much, because technically to present that, you'll get into the cramming of the concept, cramming of all of these things, which is not really required. And these days you are working on all of these case scenarios, which are more of practical based situations. Therein you're generally coming across more of those practical situations. So that I believe should not be done. Okay. So I think we can take a break now. Yeah, and we'll continue our discussion after the break. Manish, let's take a break. All right. Hi, welcome back. All right, so moving further. Yeah, so the next thing which is quite significant in the audit report, and I think we briefly touched upon this point, was about key audit matters. Okay, this is again one of the element you will find in the audit report, but not everyone. Means this currently applies only to the listed companies. Okay, so for other companies, there is not something which is applicable. Now, what is the meaning of CAM, which is very popularly termed CAM, key audit matters? So we are talking about key audit matters. Okay, and here again, please remember that we are talking about something to be given in the audit report in addition to the opinion para. But this is not the opinion in respect of any matter. Yeah. So now let's try to understand the meaning of CAM, the relevance of CAM. So far, the entire audit report that we have discussed, okay? So each and everything that you have given, that you have looked at, that was all standardized? Yes or no? So if you look at the audit report, this is the standard format. All the elements are also standardized, whether those are applicable or not applicable. Yeah. So the language is also standardized. So each and everything is available in the form of format in the audit report. Yes or no? Yes or no? Yeah. So if you look at the audit report, the components that we have discussed, this entire format that we have discussed, yeah. So that is all standardized. It's a format. Yeah. So every audit report you will get to see in the same manner. So what is the change you will get to see? Of course, the name of the company, the period, year on year. Yeah, so that's the only change you will get to see. Otherwise, every other thing, if that's a clean opinion, it will be the standard language. Yeah. Now, audit report was therefore considered to be quite boring. Yeah. So that's how you need to understand this. Why? Because there was nothing presentable, or there was nothing which was something which users can appreciate. Now, there's another aspect to this scam. During the course of year, let's talk about some of the large companies wherein the audit goes on almost throughout the year or for months. So during that period, there are a lot of areas, there are a lot of problems which the auditors may face. And I'm just talking about the challenges. Huh? So at times there could be a lot of accounting matters which are quite complex, which need to be handled by the auditor. There could be various areas over which significant judgment is required to be done. Of course, auditor will think through, auditor will do the analysis, all of those things will do. But will the user of the financial statements get to know about it? Tell me, if you look at the format of the audit report, will you get to know about any of those matters which are there in the audit, which the auditor may have faced, which the auditor may have found complexity on, over which there could have been some judgments? If you look at the format of the audit report, you will not get to see that. You will not get to know about it. Yeah. So now the users, or you can say the members of the company who have appointed the auditors, they will not get to know as to what is going on behind that audit. Correct? So they will not get a feeler of what is happening in terms of that audit process at all. Yes or no? That is where a need for another reporting was assessed, or you can say a reporting requirement was assessed. And that was all about CAM, means key audit matters. Now, what do you mean by key audit matters? Key audit matters mean those matters which fulfill some of the criterias which you can see currently on the screen. Means those matters could be the one which required significant auditor attention. Now, what do you mean by this? Say, for example, during the year, inventory valuation was one area over which significant time of the audit team was spent. And in terms of significant time, we can say significant time of senior members of the audit team were spent. Yeah, why? Because this was considered to be a significant risk area. Okay, so that's why a lot of attention was required. Significant time was spent on that particular area. Similarly, we may say that there could be some matters which are quite significant to the audit in terms of the judgment which was required to be done. Say revenue recognition. Yeah. Or if you talk about some of the estimates which have been made by the company. If you talk about some of the litigations which could be there in the company. So these are some of the matters which are quite significant in relation to any company. Third, if you look at the requirement of the auditor, if you look at the requirement of the auditing standards, certain matters are required to be communicated by the auditor to those charged with governance. Now, what are those matters? Some of the key matters, some of the important matters. Okay. Now, that will, of course, be in relation to the responsibilities, independence, scope, timing, plus the significant findings from the audit. Along with that, or in relation to the significant findings from the audit, auditor will generally discuss with them about some significant qualitative aspects of the accounting practices in relation to that particular company. Auditor will generally go and discuss with them, go and communicate to them about the significant difficulties which he would have faced, significant matters which could be there. Okay. If there is any modification which is impacting the form and content of the auditor's report, that will also be discussed. And any other matter which auditor believes is quite significant for their understanding. Yeah. So that's how you can look at this first point or first criteria about those matters which are required to be communicated to those charged with governance. Then the second category, like we just discussed, what are the matters which may require significant auditor attention? We took an example of inventory. Yeah. Similarly, there could be some areas over which the risk is quite significant. Maybe it's a very complex matter over which significant judgment is required to be taken. Okay. Some of the areas could otherwise also meet this criteria. Like, for example, we discussed that during the year, company may have started some new transactions, which may not have been there in the previous years and which is quite complex. Okay. And the way that assessment has been done by the management is quite critical. Why? Because its impact on the financial statements could be huge. Yeah. So some of these factors, auditing standard requires the auditor to look at. Why? Because this will become the basis for identifying as to what matters have been the key audit matters during the course of audit. And why is that required to be assessed? Because in the auditor's report, auditor will include a para in respect of these key audit matters. Okay. Auditor will include one para in respect of key audit matters. And what is it that the auditor will do then? Auditor will do reporting as to why that matter was considered to be a key audit matter. Number one, how the matter was addressed during the audit. So, of course, auditor is not saying that there's any qualification in respect of that matter, any modification in respect of that matter. No, that's not the objective. Objective is what? To make the users aware about the significant areas which were there, which were quite critical, over which there was no problem, there was no material misstatement, but still it's for their information. Okay, so if the auditor has dealt with that matter, which the auditor believes was quite significant, which the auditor has concluded to be key audit matter, what is it that the auditor has done? What have been the audit procedures of the auditor in respect of those matters? So that needs to be included in that para, in that CAM para. And a reference to the related disclosures in the financial statements. So if all these are the audit matters which are in relation to the financial statements, so all of these items would have gone recorded. Yes, they may have been recognized or they may have been disclosed. Yeah, so that's why auditor will also give a reference as to where are these matters, where are these areas, items appearing in the financial statements. Yeah. So now, as around why, what is it that the auditor will do? Provide insights about the factors that led to the conclusion of calling that matter to be a CAM. Okay. Description of that CAM means what was that matter? Yeah. How? We talked about it. How much detail is required to be provided in respect of getting into that assessment? Yeah. What was the approach of the auditor? What were the procedures of the auditor? And if at all there were any key observations. Okay. And then, of course, the next thing will be about their reference. So what I'll do is I'll just move on to one audit report. And in that audit report, we'll just try to look at this scam. We'll just try to understand as to how this scam has been reported or what all these things are there which are required to be captured. Just give me a minute and let me just open one audit report. All right, so just give me a minute. Okay, so if you look at this audit report now, yeah, so in this audit report, we have those same standard elements to begin with. Yeah, so this is the independent auditor's report. Opinion is clean, unmodified. Basis is given. It appears there's no EM, right? Because otherwise, after basis for opinion, there would have been an EM. Okay. And then what do you see? You see key audit matter included there. So there's a CAM. Yeah. So let's try to understand this. Let's try to read this. And here again, you'll see some of the similarities in relation to CAM. If you compare this to EM, for example, in EM, in other matter, para auditor was clarifying, there's no opinion as such in respect of this. So let's try to understand the wording. Through the wording, you should get some more clarity. Okay. All right. So now, auditor is saying key audit matters. First of all, he is explaining are those matters that in our professional judgment were of the most significance in our audit of financial statements of current period. These matters were addressed in the context of our audit of the financial statements as a whole and in forming our opinion thereon. And now comes the most important line. We do not provide a separate opinion on these matters. Okay, so auditor is clarifying that our opinion, whatever was that has already been provided in this section. Okay, so when you go read this CAM or these matters, please don't think that we are providing our opinion again or there's a separate opinion on those matters again. Understood? Yeah. Now comes the next part around CAM. What is that? First of all, auditor will go explain the matter. What is CAM? What is the matter? And why that has been considered to be CAM? Okay, so why? Number two, how the auditor has dealt with that matter. Okay, so we'll read one. We'll read one matter. Revenue recognition. Revenue recognition, I hope you must be knowing that it's considered to be a significant risk area for every type of entity. Yes or no? And this is also considered to be a fraud risk area for every type of entity. So be it any entity, so this is by default considered to be significant risk, fraud risk area. So therefore, of course, one can say that this will generally meet the criteria to be a CAM. Yes or no? Yeah, but still, let's try to understand as to what is the explanation which the auditor has given in respect of this particular revenue recognition. For revenue recognition, auditor is saying fixed price contracts where the revenue is recognized using percentage of completion method. Means auditor is not talking about complete revenue recognition, or we are not sure whether it's all about entire revenue recognition. Auditor is very specifically talking about those contracts wherein the revenue was recognized using percentage of completion method. Means that is what he found to be challenging. Okay, so let's read this. Company engages in fixed price contracts wherein revenue is recognized using percentage completion method as per input method based on company's estimate of contract costs. Some of you are saying AS9. No, it appears to be a case of AS7 for me. Anyways, for this company, Ind AS was applicable, but still, if you want to draw the reference, it should be to AS7. Okay. We identified revenue recognition of fixed price contracts where the percentage of completion is used as a key audit matter. Since, okay, so auditor is explaining why this is a key audit matter. There is inherent risk and presumed fraud risk around the accuracy. So he's talking about the assertions. Can you see this? Auditor is specifically giving the assertions which have been the problem around the accuracy, existence of revenues recognized. Considering the customized and complex nature of contracts and the significant inputs of IT systems. That is one. Further, he's saying application of revenue recognition accounting standard is complex. So he's saying this accounting standard is quite complex in itself. It involves number of key judgments, estimates. These contracts may involve onerous obligations. At the year end, significant amount of work in progress related to these contracts are recognized. Okay, so auditor has explained his rationale, his reasoning. Yeah. So reasoning around what? As to why did he found this particular matter to be key audit matter. Understood? Yeah. So of course, I think you are getting onto the accounting requirement. So whether this is construction contract or any other contract, let's not get into that. I was just trying to draw the principles which could be used. Okay. For us, accounting is not required right now. Huh? For us, important thing is audit. Okay. So let's focus on the audit part, not on the accounting part. Next point is his explanation around what is it that he has done. So if the auditor is explaining that this is complex, this is complex, this is complex, everything is complex, then what did he do? How did he deal with that? Yes or no? So was he able to deal with that or not? When he's saying that I am giving a clean opinion, so what is it that he do? What is it that he has done? Okay, to take care of all of these challenging areas. So let's try to understand that. Our audit procedures included the following: obtained an understanding of the systems, processes, controls implemented by the company. Then, involvement of IT specialists. So, means auditor has used his expert, right? Then, on selected specific and statistical samples of contracts, means sample testing he has done. We tested revenue recognized is in accordance with accounting standard, including evaluated the identification of performance obligation. Yeah. Yeah. So testing the company's computation. So whatever company computed, we tested that. Yeah. So some of these procedures he's explaining. Yeah. So I'm not reading this in entirety. You can go and read that. Okay. Now, this is what CAM is all about. Similarly, you can go refer any other audit report. So you'll find CAM. Yeah. So understood about CAM? Any questions? Any doubts around this? Yeah. Third, if you look at CAM, so it gives the reference, these two notes. Now, what is the relevance of this? So, in these two notes, in the financial statements, these items would have been explained. So, you can go check that. Okay. 4A and 10. So, let's go look at 4A and 10. So, we'll have to go to the financial statements. Note 4A. So it's a big set. Okay, so just give me a minute. It's a big set. I think 4A we have skipped, so I'll just move on to 10 straight. All right, so 10. Yeah, so here we are. So in note number 10, company has explained about revenue recognition. So this is the disclosure about revenue recognition. So it appears to begin with they have an accounting policy first of all, and then of course the disclosures around this are given. Okay. Yeah. So can you see this? All of this is what? Disclosure around revenue recognition. So auditor is drawing reference to this. Yes or no? Yeah. Clear on this? Okay. So Hardik has a question. Hardik is asking, so like EUM, CAM should also be, I think you're talking about the reference. Yes. And in fact, if you go look at that requirement that we just discussed. So if you go look at that requirement, okay, so we talked about three things for CAM. So every time a CAM will be given, auditor will be required to give three things. One is about why CAM. Second is how that was dealt. Third, a reference. So this disclosure is all about reference. to the related disclosures in the financial statements. Okay, everyone clear on this? Quickly, everyone clear? Any questions, any doubts so far? Quickly, please confirm. Then we'll move further. Any questions, any doubts? Tell me quickly. No? No? Clear? Clear so far? All right. So now we'll move on to some more areas. Okay. Which is more about audit, I would say. Not really very specific to the audit report, but because this is all about reporting requirements, so that's why they are quite relevant. Now we have this standard, okay, which deals with the corresponding figures, comparative financial statements. Okay, so now let's try to understand about this. Now, if you look at this comparative, this is an essential area in the financial statements. Now, whenever you have the corresponding figures, auditor's opinion on the financial statement will refer to the current period only. But in respect of the comparative financial statements, auditor's opinion refers to this each period, means entire set of financial statements that is present. Yeah. Now, what is it that the auditor needs to look at in this case? Auditor needs to determine whether the financial statements include comparative information, okay, which is required by the framework under which that is required to be captured, and whether that has been provided in accordance with the accounting policies or not. And if at all there is any material misstatement or possible material misstatement, so what is it that the auditor will do? So auditor will perform the additional audit procedures around it, or may eventually get onto the reporting requirements. Yeah, something that we just discussed. Yeah. Further, when the corresponding figures are provided, auditor's opinion shall not refer to the corresponding figures except in the following circumstances. What is that? If the auditor's report on the prior period as previously issued included a qualified opinion or a disclaimer, means there was some modification there. Okay, only then the auditor's opinion shall refer to this. Okay. If the auditor obtains audit evidence that a material misstatement exists in the prior period financial statements on which in the prior period unmodified opinion was given. Yeah. So of course seems to be the situation wherein this appears to be quite relevant. Or if at all prior period financial statements were not audited, then of course if that is not audited, so auditor will have to cover that. Yeah. Otherwise, auditor shall not refer to the corresponding figures. Okay. Yeah. Now, there is another concept about the branch office. Let's try to understand about this concept around the branch office. Now, what do you mean by a branch office? Branch, you can say, is one of the part of the company or one of the businesses of the company, or you can say one of the business unit of the company. So that's how you will define a branch. Yes or no? Now, in relation to a branch, what is it that is required to be done? Audit, of course. Now, because a branch is a part of the company, so that's why you will have this situation. So let's suppose this is the company. All right, this is the company. And this is one of the branches of the company. Say this is branch B1. Now, sometimes some of the companies, for example, in case of PSUs or government companies, you see there are a lot of branches. And those branches are quite significant and they are quite decentralized at times, in terms of running their operations or in terms of handling the part uh, as around that branch. Okay, and that's why in those cases, auditor of the branch is appointed separately. Means for this company, there will be two auditors. One who will audit only the branch. Okay. Who will audit only the branch. And if let's suppose we say that in this company, say there are three branches. Branch 1, branch 2, branch 3. And we may say there are three auditors. Auditor 1, auditor 2, auditor 3. Then what will happen? This company will also have one head office. So let's suppose this is the head office. For this head office or for this company as a whole, somebody will have to do the consolidation also. Consolidation means head office will prepare the financial statements of head office as well as the branches combined together. Yes or no? Why? Because branch will prepare its trial balance or maybe the financial statements of the branch. Each of these branch will only prepare their own books of accounts. But for this company, what is required? Financial statements of the company as a whole? Yes or no? Tell me. Financial statements of the company as a whole? Yes or no? Yeah? Now, when the financial statements of a company as a whole are required, and when you have auditors A1, A2, A3 who are auditing only the branches, then somebody needs to be there who can just first of all prepare the financial statements of the head office and all the branches. Means somebody who will prepare the financial statements of the company. Yes or no? So who will that be? That will be the head office or the management of the company. Correct? That will be the head office or the management of the company, or you can say the corporate office. Correct? Yes or no? Tell me. Tell me who will do this exercise. Will the auditor do this? Or can the auditor do this? Over to you quickly. Tell me quickly. Who will do this? So Dilip says, no, auditor can't do this. So who will do this? Tambeshwari says management. Management means what? Branches. So what do you mean by management? Pranav says head office. Yes or no? So therefore, the team over there or this head office, what will they do? They will prepare their own trial balance of the head office. Plus, they will also merge trial balances of these branches. Or you can say consolidate all of these together so that financial statements of company are prepared. And whose responsibility will be to audit the financial statements of the company? Let's suppose there's another auditor, that is C1. That is C1. So all in all, how many auditors do we have for this company? Four. Bhavna says four. Manvi says no. Four. Great. I think Dilip also says four. Now, in this case, C1 is very commonly called as principal auditor. Okay, so there's a term which you will attach to C1, that is what? Principal auditor. Or you can say auditor of head office or auditor of corporate office. Okay. These auditors, A1, A2, A3, what do you call them as? they are called as auditors other than principal auditors, or you can say auditors of the component. Why? Because B1, B2, B3, what are these? These are nothing but the components of the company. Okay, so they are nothing but the components of the company. And the auditor who will audit the component, what do you call them as? Component auditor or other auditor. Means who is auditing only that component. Okay, clear on this? Yeah. Now there is a very important aspect which is required to be understood, and for that we will move on to another auditing standard. See, when it comes to any such situation wherein two sets of auditors are involved, I'm saying two sets because there are two types of auditors are involved. One, that is the principal auditor, and second, that is the component auditor. Now, whether component auditors are 4, 3, 2, I'm not talking about that. I'm saying there are two categories of auditors. Now, how is this relevant, or what is it that we need to consider here? See, all of these auditors of the component, what is their responsibility? Their responsibility is only limited to the component. Beyond the component as to what is going on. So what is happening in branch 2 is not the responsibility of component auditor of branch 1. What is happening in branch 3 is not the responsibility of component auditor of branch 1 or branch 2. Yeah. So these auditors, what will they do? Component auditor will audit their components, or you can say their respective components. Yeah. Using the same set of auditing principles what we have discussed so far. Means they will apply similar set of procedures, same type of planning will be done, same sort of execution will be done, same sort of conclusion will be done, and in a similar manner they will also do the reporting. Means they will issue their audit report in respect of their branches. Okay, and subsequently what will happen? Subsequently, all of these reports will be sent to the principal auditor. Now let's try to understand. See, what is the role of the principal auditor? To issue audit report on financial statements of the company. Yes or no? Yeah. Now in this company, there are four parts. Now please understand this very carefully. In this company, there are four parts. Three branches, which are already audited by some other auditors, and head office, which is going to be audited by principal auditor. Yeah. So you can say primarily principal auditor is responsible for what? Audit of head office. Yeah. Over and above that, the compilation that will be done, the consolidation will be done. That is again the responsibility of whom in terms of its audit? Component auditor or principal auditor? Tell me, component auditor or principal auditor? Tell me, who will be responsible for that? Component auditor or principal auditor? Principal auditor. Yeah, because component auditor has no visibility on that, because whatever he was required to do, he has done that and given that to the head office or the principal auditor. Now they need to take care of that. Okay. But auditing standards have also placed some additional responsibility on the principal auditor in addition to these two things that we just discussed. What are those two things? Head office plus the compilation or the consolidation. Now, what is that? Because principal auditor is the one who is auditing this complete company. Auditing means who is required to issue audit report on financial statements of this company. So that's why what he should do is he should make sure that the communication from all the from all the component auditors have been obtained. Their reports have been obtained. If they have reported anything in their audit report, that has been taken care of at corporate level, at consolidated level. Yeah. If anything is required to be communicated to the component auditor in respect of any company, in respect of any significant area, in respect of any significant matter, which they need to be aware of, who will do that? Principal auditor. Once the component auditor has completed the audit, what is the role of principal auditor? To rely on their work. And if you remember other matter paragraph, you remember other matter paragraph? What was that for? Tell me quickly. Other matter paragraph, what was that for? That was in respect of this thing only. Quickly, please confirm. That was in respect of such thing only, wherein the branch auditors will do the work, give to the principal auditor. So what will the principal auditor do? In his audit report, he'll say that these branches were audited by other auditors. I'm relying on their work. But at the same time, auditing standard requires that if the principal auditor is not comfortable, then over and above what the branch auditors have done, principal auditor can also perform some additional procedures in respect of those branches. Why? Because eventually it's his responsibility to audit the company as a whole. Even though he'll rely on their work, but if he believes there's something which he wants to look at, he can ask them to perform. Or if that is not performed by the branch auditors, or if he wants to go visit those branches, if he wants to go perform those some additional procedures, he can do that. He can always feel free to do that. Clear? Yeah. And for this, auditing standard which becomes relevant is SA 600. Using the work of another auditor means principal auditor is using the work of component auditor. So who is using the work? Principal auditor. Whose work is being used? Component auditor. Okay. So that's how this will be taken care of. Understood? Understood? Yeah. So I think we have one example around this. Okay. So let's quickly look at that example to get some more clarity. All right. So just give me a minute and let me just go to that document. Okay, so let's look at this sort of case scenario. CA Dicky Yadav is auditor of a company having 4 branches. 4 branches are audited by another auditor, CA Yamini. Okay, CA Yamini Jain. Reports in respect of accounts of branches examined by CA Yamini have already been sent to CA Dicky. During the course of audit, CA Dicky asked CA Yamini to share with her summary of audit procedures and findings in respect of accounts of branches which have been examined by CA Yamini. CA Yamini feels this is an encroachment of her domain, means she is not comfortable in sharing all of these information. Your comments. Over to you. Tell me, what do you think? What do you think? Over to you quickly, huh? Tell me quickly. What do you think? Over to you. In this case, is the principal auditor all right in respect of these things uh, to be asked from the component auditor? or you believe no, it's not appropriate to obtain that. Okay, Dilip says CA Dickey can ask. This is absolutely okay. Kasak says auditor is right in asking the summary as he's the principal auditor, have to carry out such procedures. Hardik is saying it's necessary. Yeah. Okay. Anjali says it's absolutely okay. Nitin is also saying it's absolutely okay. Yeah. What about others? Quickly, yeah. Okay, so Ritika says CA Yamini feeling about her encroachment is not correct. As a component auditor, it's her responsibility to provide the required information. Okay. Apurv is saying she can't deny because principal auditor is responsible for audit of the financial statements of company as a whole. Yeah. So now in this context, let us just go back to the presentation. And I just like to highlight some of the things for your reference. See, if you go look at the requirements of SA 600, yeah, so what does it require? It says principal auditor should ordinarily perform following procedures. Advise the other auditor means advise the component auditor of the use that is to be made of other auditors' work and report. Okay, make sufficient arrangements for coordination of their efforts. Means in the planning, component auditor, which whatever planning component auditor will do, principal auditor will remain involved in that. Principal auditor would also inform matters which require special consideration to the component auditor, and will also share timetable for completion of audit. Why? Because till the time branch auditor will not complete the work, can the head office complete that? No. Principal auditor may also advise other auditor about significant accounting, auditing, reporting requirements. Okay. And also obtain representation from them that they have complied with those requirements. Further, principal auditor might discuss with other auditor audit procedures which they have applied. Okay. Review a written summary of other auditors' procedures, the findings which they have had in the form of a completed questionnaire or a checklist. Yeah. Principal auditor may also wish to visit the other auditor. Means go meet them, discuss with them. And what will be discussed? Nature, timing, extent of procedures which they would have applied. Yeah. So some of these things are the areas which the principal auditor can always ask the component auditor. And of course, if the principal auditor can go, if he wants to go, he can just audit that component auditor independent of what the component auditor has done. So it will not be a full-blown audit per se in totality, but anything add-on, anything that he wants to top up, that can always be done. Understood? Yeah. So if you go back to that case scenario wherein CA Yamini felt uncomfortable, so that is inappropriate. Why? Because that is, you can say, is the responsibility of CA Yamini. CA Yamini is supposed to provide that. Yeah. So CA Yamini cannot deny that. Okay. If that is denied, then you can say that it's something which CA Yamini has not complied with, and without which CA Dickey may have to then perform those procedures on her own. Okay. Clear on this? Yeah. Any questions, any doubts so far? So I think this is it that we can just plan for now, because the next topic is about joint audit. So I plan to not get into that now. Maybe if you have any questions, any doubts that still remain, we can discuss that and then we'll close our session. But please remember, we are not yet done. Okay, on this particular topic, there are few more areas. In the next session, we plan to wrap it up. All right. Okay, so any questions, any doubts that you may have, please let me know. Over to you. Tambeshwari is asking, what is Karo audit? Let's wait for next session. Huh? In the next session, you will get to know. Briefly, you can understand that this is one part of the audit report. A part of the audit report, okay, that we have not discussed. So we'll cover that. Very interesting and very important part of the audit report. Hardik is saying auditor has to give the opinion on this. Yes. No, so it's not about both. It's about what is going in the set of financial statements which is getting audited. Okay. Ritika is asking about this in short. So what I'll do is, okay, Ritika, if you want to get into some of these summaries, then I think ICAI has done this wonderful job for you. Okay, so if you are interested in summaries, I think I have discussed that previously. Let me just share that with you. And maybe you can just, refer this at any point of time. Just give me a minute. Okay, something like you're just looking at. Okay, just give me a minute. Okay, so this is a very nice document which is available on BOS portal and which has been called as Saransh. Yeah, so I think some of you mentioned. Very good. So it appears you understand. Okay, great. Nitin Tambeshwari. Yeah. So this you can go look at. Okay. So this covers all of these auditing standards in a summarized manner. You can just go refer that at any point of time. Yeah. Clear on this? Okay. Sania is asking, sir, other auditor in the branch audit belong to the same firm or other firm? Generally, it will be other firm. Yeah. But the same firm can also be auditing the head office or the branch. So that possibility remains, but generally you find that to be another auditor. Hardik is asking, where do you download this from? So I think I have already downloaded this. I'll upload this, don't worry. So I'm not sure why I've not been able to download. I'll upload this. Okay, so I think the portal where you get these presentations, where I've been uploading or all of these presentations you are getting of the session, I'll upload that there. Fine. Yeah. Or otherwise, I'll just find out. Maybe the link I'll have to find out. I'm not sure where did I get this access from. It's been long. So I'll just let you know the link. Or otherwise, I'll also put this on the portal. Don't worry. Portal means the portal where these presentations are shared. Pallavi is asking, is it possible that one auditor is going to audit? Yes, possible. Same auditor can also audit all the branches. There's no such restriction. Yeah, that is also possibility. All right. Any more questions? No? All right. So then I think, okay, Malu is saying this is available on BS portal. Great. Malu, you can share the link over here with everyone so that I think they can access that. Okay. All right. So I think we can just close our session now. Thanks everyone for this time and for this wonderful participation. Thanks so much. And please try to revise this, what we have discussed so far, because we are going to apply that. And in the next session, as the time permit, we'll also take up some more questions, particularly around the audit report in terms of modifications, etc., just to practice. So let's see as to how do we progress on that. Okay. Yeah. So thanks once again. Yeah. All right. Okay. So I think Manish, yeah, we can close this. Yeah.